What is up, guys? This is The Broke Executive, and today we're doing the November and December portfolio and dividend review, where I'll be going over how my account has changed over the past month and what stocks I purchased at the beginning of this month, and just a couple thoughts about the companies I purchased, why I purchased them, and just going over every single company that paid a dividend in the month of November. So with that, let's just jump right in. Portfolio overview, monthly return. I had just shy of $450 of return. It was a pretty good month. It came out to be about an 8.05% return. This isn't something you can typically expect, but with news of vaccines to cure mask wearing, the market did rally quite a bit, and it was a very promising month, and I'm glad I stuck with it, even with the little downturn that you can see going into the month, which also helps with the monthly return view. And then in terms of dividends, I received $16.78 over the course of the month. This comes out to a yield of 0.3%, which doesn't sound like a lot, but if you were to annualize that over a 12-month period, that is a 3.6% dividend yield, which is right around where I want to be. I'm looking between the 3.5% to 4% range. So good to see that this number is right where I want it to be. If you remember from my last video, it was actually fairly low. That's because October tends to be a lower paying month. November and December will be higher paying months. You will be able to see that in the next portfolio update as well. In terms of change year over year, November of 2019, I only received 20 cents in dividends as compared to this past month where I earned $16.78. This does work out to be almost an 8,300% increase, which is very unrealistic to see year over year. That is because I started my dividend investing back in October and November. So these numbers are fairly high, but it will be coming down. Again, in my previous video, the change year over year was something like 10,000%. So this is coming back down to a more normal level. I expect to be seeing the change year over year closer to the 4 to 5% over time. This won't really come into fruition for a couple months as we get into the more repetitive cycles where I've already been dividend investing for a while. Obviously, when you're new and when you're beginning, you're going to see some giant leaps and jumps, especially looking at year over year charts. Again, especially if you have no history the month prior. That does come up in a couple of my older videos. But as you can see, we are in fact improving, and by quite a bit, because I am, again, still fairly new at this. Here you can see the monthly income growth over time. Now, I will point out again that this dividend right here in May, that was a special dividend. That wasn't something I intentionally targeted. And then down here, October and November, these were the first 2 months where I was actually dividend investing. December, you can see I earned 605. So coming up here this December, not all of the dividends are announced. That is this current month. That will increase over the course of the month before it comes out to a final value. I expect right around the $17.50 to $20 range. But again, we are completely dependent on companies paying their dividends. You will notice January, February, and now March, I do have some dividends announced, but that is not all of the dividends I will be receiving. You will notice it is following that trend line pretty nicely, which shows that dividend growth is in fact there, even with the months going low, medium, high. It is a cyclical chart. That is because when companies decide to pay their dividends on their own accord, they don't get together and plan and say, all right, everyone has to spread out where their dividends are being paid. Companies just decide and will say, hey, let's pay our dividends these 4 months of the year, and then they stick to that plan. You will notice that some months are more popular because it tends to be the end of the economic cycle in terms of the quarters. For my December purchases, I purchased 2 different companies. One share of this one, which is iShares 3 to 7 year Treasury Bond ETF. The reason I bought this one is it's 3 to 7 year Treasury bonds. I currently have 1 to 3 year bonds, and I felt the need to increase my bond allocation. So I added 3 to 7 year bonds as well in the form of an ETF. I bought this company $132.62. I did buy just the one share. They have a dividend yield of 1.19%, which comes out to a yearly income of about $1.58 per share. The reason I chose to increase my bonds, and specifically treasury bonds in this case, is because I wanted that diversification and that safety net that if companies aren't performing well, typically treasury bonds tend not to move as dramatically or even at all. So this will help balance out my portfolio so I'm not seeing these wild swings over the course of, say, a pandemic. IEI, or iShares 3 to 7 year bond, has seen a dividend increase and a dividend growth over the past 5 years of 10.91%. This is actually very good and very competitive. I do like to see that even treasury bond ETFs are in fact increasing their dividend growth over time, because with dividend growth investing, that's something you tend to target. The other company I purchased is also a bond ETF, and that is BNDX. This is a company I already previously owned 3 shares. I now have 2 additional shares, and I purchased these 2 shares for $58.30 for a total cost of $116.60. BNDX does have a higher dividend yield of 3.21%, although they do not pay out a standard 3.21% averaged out over the course of the year dividend. They actually pay smaller monthly dividends than in December. They typically tend to pay a special dividend right at the end of the calendar year, where you will see a much larger payment. So in the past couple months, BNDX has been paying about 3 or 4 cents per share, which obviously is not going to equate to $1.87 over the course of a year, but they do tend to pay about $1.45 to $1.50 at the end of the year per share. So I will be seeing that coming up with hopefully all 5 of my shares. They haven't announced the dividend yet, so I assume the ex-dividend date has yet to come up as well. So I should be able to get the dividend paid for all 5 of these, in which case it should be a fairly well-timed investment in terms of the instant gratification of receiving those dividends, especially that special dividend. And again, BNDX is to help reduce my portfolio, and because it's an international bond ETF, it deals with not just U.S. Treasury bonds, it deals with other international companies and other international governments. So there are a lot of emerging companies and with their growing economies that have issued bonds for the country, and this ETF is able to capture that. So I'm exposed across the entire world and not just the US in terms of being able to capture the economies there. BNDX has also seen an 18.71% dividend growth over 5 years. Again, this is something I like to see. It shows me that the dividend is in fact increasing over time. And it also helps kind of just show you that the overall economy throughout the entire world and on the international market is in fact increasing, which is very reassuring to me as an investor looking at companies that tend to deal with international trade. Now for the November dividends, some of these companies you will recognize from previous dividend videos, or even companies that I've purchased in recent months, and some of them you might never have heard me mention before, but that's not a big deal. The point is they pay dividends, and they paid me this previous month, so let's just jump right into this one. On November 2nd, I had both of my telecom companies, AT&T and Verizon, pay out. These are 2 very high yield paying companies, and they're direct competitors with each other. I own more shares of AT&T than Verizon, and they do have a slightly higher dividend yield. That's why the dividends are different. Unfortunately, it can't be a perfect match and mirror, but they do pay their dividend on the same day in this case. On the 6th, I had my bond ETFs pay out. So I have the 1 to 3 year bonds, or SHI. I have my investment grade corporate bonds. So these are companies that have issued bonds in the form of LQD. And then my current international bond, I received 14 cents from them. Like I said, BNDX does in fact pay that special dividend, and that's why I'm able to have 14 cents but still have that higher yield. And this 14 cents does not include the 2 shares I purchased at the beginning of this month, because these were dividends paid last month. The dividends paid for November in terms of the regular dividend will also be a smaller value, but that special dividend at the end of the year, I will be able to capture all 5 of my shares. Then on the 13th, I had Realty Income, or O, payout. This is one of my favorite monthly dividend stocks. It is a real estate investment trust, or a REIT. I've mentioned it before in some of my videos. Then my other company is Apple. This is one of the first companies I bought since I started this YouTube channel. I've purchased 2 shares, and they paid out 41 cents between the 2 shares. On November 16th, I received dividends from AbbVie and Stag Industrial. Stag Industrial is another monthly paying REIT. AbbVie is a pharmaceutical company that is knee deep in exactly why the market's rallying. So glad to see they're paying dividends still and able to continue working. Then on the 20th, I had another triple dividend. This one comes from Clorox, which I actually purchased last month. I happened to buy it right before the ex-dividend date, so I got a little lucky there. Then I also have Caterpillar and my other REIT, which is Welltower. They do not pay monthly dividends. They are a quarterly dividend, but they did in fact pay out this month on the 20th. And then last but not least, we have SPHD. This is probably my favorite dividend ETF because it does pay monthly, and I received 46 shares from them. That is all the dividends I bought, companies I purchased. Now, I was just going to kind of talk about this chart here. As you guys can see, it has been quite the ride over the past 12 months. Right around here is February 19th. That was the last green day before the market dropped. This is March 23rd. Ignore the little slide thing at the bottom. Then this was my month of October. You'll remember that from the previous video if you've seen it. Then right in here is where November began. That is why the percent return over the course of the month is so high. In terms of a annual increase, 12% is in fact a fairly high number. Typically the market returns between 7 and 8% with dividends reinvested. So you can't traditionally be looking at this and thinking, okay, well, he earned almost 13% over the past 12 months, so I should be able to do the same. It really comes down to luck and a little bit of timing the market, because right when the market was dropping is when I invested my tax return from the previous year. So I bought in probably right around here, and I did put in a larger chunk of money. So as the market returned to its previous levels, I was able to capture that and actually make quite a bit in profit there. That is not me trying to time the market. That's just when the money hit my account, I put it right into my investments. If the market continued to drop, I wasn't planning on holding on to the money and waiting to find a bottom. I put it in as soon as I could, and it happened to pay off, because chances are time in the market is going to beat timing the market. And that's something I really wanted to be able to touch on. I'll probably be doing a video on that in the future and why it's so important to just start now and start early, rather than trying to think, well, there's going to be, another drop and blah, blah, blah. There's no point in trying to wait and hope, because on the odd chance you're right, yes, you get to tell everyone I told you so, but on the chance you're wrong, that means the market went up and you weren't in it. That's kind of my philosophy and how I'm looking at this. Just continue to put in my monthly investments. I'll be putting in a portion of my tax return again coming up in the future. But again, we'll have to see once I pay all my taxes, and if there is a return, then I can consider it. But something to look forward to in the future. If you do notice a giant jump in the portfolio, I will be mentioning it in the video if I do end up contributing some of that money. That's really all I have, so I will remind you guys to like and subscribe. If you want to get a free share from Robinhood, if you sign up using the link below, you can get 1 free share. Or if you sign up for Webull, you can get, I believe the deal right now is 3 free shares when you create an account and deposit $100. They did just end a promotion for 4 shares. If you guys were able to capture that, great for you. But Webull runs these promotions all the time. Right now, it's 3 free shares, 2 of which could be valued up to $1,600. If you have any comments or questions, feel free to drop them in the comment section below, or you can hop over to the Broke Executive subreddit and feel free to get a hold of me there. Make sure you follow me on Instagram. I also have that linked below. And with that, I will see you executives in the next video.